Hi, folks. The Indian equity markets cooled off after September 2024. At that time, the Nifty 50 had reached a peak of 26,000 levels. In March and April 2025, we saw the Nifty 50 decline to around 22,000 levels, and now it is just short of 25,000 levels. One of the common things that I hear from investors is that my XIRR or the rate of return for my mutual funds has now dropped from the levels it was at before, which was at about 30% or higher. What should I do? Should I sell off my mutual funds and move to other forms of investments? Now, it is important to understand that while there is a drop in XIRR, this does not mean that your portfolio is not growing. Let me give an example. Let's say that there's an investor who invested 1 lakh rupees in an FD on 1st June 2020. And the same investor also put 1 lakh rupees into a mutual fund, an equity mutual fund. Let's assume that for the next 4 years, the FD grew at a rate of 7% per annum. So at the end of 4 years, the FD grew to 1,31,000 rupees. Let's assume that the mutual fund showed a 30% growth year on year. Therefore, the mutual fund grew from 1 lakh to 2,85,000. But markets cooled off. So in between 2024 and 25, the XIRR dropped from 30% to 25%. However, the 2,85,000 which showed at the end of May 2024, at the end of May 2024, it grew to 3,05,000. The FD was at 1,31,000. If you remember, in May 2024, it grew to 1,40,000 only. So the drop in XIRR reflects the cyclical nature of the market. It does not mean that the long-term trajectory of the portfolio is going down. Yes, the portfolio is growing at a slower pace, but it will still continue to grow and compound and deliver wealth over time for you. In India, it is important to understand that if a fund manager delivers 12% on a 5-year to 10-year basis, then they consider their job to be done. So the earlier rates of 30% which we had seen were not sustainable, and nobody in the mutual fund industry was saying that this is going to be sustained for long periods of time. It was always expected that the rate of return will come back to normal levels. Given the current economic scenario, given the current global scenario, given the way our companies are performing right now, it was always expected to be around 12% or so. As investors, we should continue to stay invested, but we should also monitor our portfolios. We should understand what is affecting it both globally and locally, and then see whether any tweaking is required. Otherwise, we can stay invested for the long term and watch our money compound and grow over time. I hope this helps you. If you have any queries, please drop a comment or write to me at my contact points, and I'll be happy to get back to you. Thanks for watching.